Hi guys, welcome to earnings season. I'm Randy at RT Row.
And I'm Danai at H.ja.
And we are doing earnings season that you know and love as we do every week. We're trying to give you guys as much value as we can for 2020. Hope you guys have liked how we're doing so far. Started off strong with Miss Gilly.
Her name is Jillian, not Gillian. Gillian is a male's name, sir. Boy, Jillian, was skunky me because this is not the first time.
Big up.
Big up, Jilly. Yo, again, somebody was showing me the notes on their phone because she was just running through her financial planning and thing. And lo and behold, in everything, so she just started listening to the podcast. But the link for the podcast is higher up in her notes than Jilly's blog. So she found Jilly's blog before, and then she came on the podcast.
Oh, I like that.
So
Reach.
in my was like, oh, Reach. So she joined Twitter recently, and then Jilly, big up Munchie, you know yourself. So
Is that really her nickname?
Yeah.
Can I lie that?
No, we call her Munchie. It's our friend at work. So yeah, thing there, man. So
Big up Munchie.
yeah. So she think there, Jilly was in her notes for her financial planning in her future. She listens to the podcast, by the way.
I like that.
So she could hear herself.
So she planned to get that host.
So Jilly really have that reach.
Yeah.
To be honest.
Big up Jilly with that reach, yes. All
Value is where value is, right?
Yeah. Where do I go? This is me trying to figure this out. So, Miss Gillian
Jackson.
I don't know why this is happening to me. It's like you like, don't say red. You're one of those things, like you're somebody you think so much about not saying one thing and you end up saying the thing. Jesus Christ. That's how I feel that I'm thinking, don't say Jill.
Gil. Don't say Gil. Say Jill. Jack and Jill. Yeah. Jilly Jackson. Jack Jill.
There we go. It's Jilly J. Bigger up. I had the pleasure of, she tweeted this, I can say it, of speaking to her and some of her team members this week, last week.
Bring a celebrity into the house?
Yeah. No, she invited me. They're used to her. They're used to her. But it was I thought it was a good session. I tried a little, a technique I've been trying to perfect in terms of how to get my information across. And simplify things and simplify what's needed and certain concepts in like a real way, simplify way. So I tried it with them, which is literally a story. But I just used my life and my story of my life, but I told specific things that happened and certain events in order to show how to utilize other things. I hope anybody listening to this using a template for anything, go ahead, there you go. Free content. But yeah, literally a template for my life and to show them what's going on. What the hell was I saying?
Yeah, we got her place.
So she invited me to come and talk to some of her staff members, some of our team members and staff members, their team members, and just general stuff, getting started, the process, to look out for, or to ask yourself for certain things. And I know it's a limited amount of time, so I wanted to get the information across them in the best way possible. So I use little bits from my life and just, put it. They seem to enjoy it, and I like doing it, and I think it went across because people always, you got people ask you about it, and they have 5 minutes to talk to you, and they want you to give them the world of what you know in 5 minutes.
Yeah. So you're a motivational speaker now, sir?
No, Jesus, no. Oh God, no, certainly not. No. I can't. No.
A lot down the stadium.
That's not for me. Not for me at all. Jeez, no. Jeez. Yeah, so people listen to us, we talk about business, we talk about everything, anything interesting. And of course, we start with the market, of course, that's where we care. We spend a lot of our time. Where do we start? Anything hot in the market that we missed since the last time we were here? I know we have, what's one thing I know? I think about the JSC news feed. I think about the article, like which articles have I seen, and like, you remember, I can check this. Sygnus.
Well,
it wasn't in the news feed.
It wasn't in the news feed, no.
Yeah. Well, what was in the newsfeed was them.
Sygnus Capital, the the parent company from the company that we own. The management company, they took a stake in a company in Aruba.
Oh, well, I was just going to talk about the capital raise.
Oh, the capital
because
raise.
that was on JSC's front page. Meaning that just the permission. I don't know if we had a podcast inside. Meaning the official permission. We did mention it and we did the clip in, of course, but I don't know if the official mention was it. That's
no, I haven't done any official. I haven't spoken about any official.
No, I think
mention.
we did. Oh God, somebody's correcting the microphone right now. We did because we remember we actually put in the Kalila, big up Kalila.
Oh, so we had Kalila's part. What did we put in?
We spoke about Berries and the Rays, and then I think you're right. I don't know if we mentioned the official notice.
All right, so I know that there's a news article that speaks about.
Not the news. I don't want to go there yet because that is post Rays.
All right, cool.
No man, this was on JS. It's just them saying that they have been given the permission to raise it, and they.
I don't know.
Yeah, they're not massive. That's what I'm saying. For me, in my mind, I'm running it along a line. So there's that. There's we knowing about it from a long time, last year. Thanks. I mean, it was said. Kalila put it on. She had a wonderful interview with Berries, and then we went through it again. But then from that, lead me then to news part article. 2, which is the article which spoke about them raising part of the money. So the promises that they'd raise the money in 2 different ways, or in multiple ways, debt and equity, and they said that they've done the debt raise already.
So that means that they have money now. Money start working already. You know?
Yeah. Well. Then the third article was to say that's how I went along the line. So the third article was to say that they have bought.
But that wasn't. Yeah. So
they came right after
Sygnus Capital. Yeah, man. So after around the same time, I don't remember when I got which which order I got which. But I know that Sygnus Capital took a stake in an Aruban company. But to me, the way Sygnus Capital works is we do securities and we have a pool of funds in Sygnus credit investments where we can draw upon so we can finance the opportunities we present to companies. So they see a good company, they want to finance them, want to help them out, you know, and guess they put the shareholders in there in some way. So maybe we'll be doing the debt for them or some level somehow, but it's going to work out where we get returns from the deals that Sygnus Capital itself does, our structures. So the way I see it, we have a foot there in some way. And you see that on the first foray into Aruba, they had that thing with gas and azan with the supermarkets.
Was it known that it's gas and azan?
Oh, okay.
As in you remember we guessed?
Yeah.
Because we knew about the gas and azan thing separately, and then we learned about Sygnus later on, and then later on Sygnus said something about having something ABC. So I don't know if you've ever seen it, but I don't know if the article said
it was supermarket links.
It was just a supermarket chain. I would say, well, how many people in Jamaica could have done that?
Yeah, so we did. We might have guessed. Yeah. So all right, so.
Well, I mean, I hope it's him. I think it's him. I hope it's him. Yeah, actually,
so. I just want to see Jamaica everywhere in this world. So if it's him, that's just Jamaica having a bigger footprint all over again. So big up to him, big up to Sygnus. If they're working together, then big up me.
Our company's doing well.
Yeah, damn right.
But what you said something that I think a lot of people might pick up. You said Sygnus Capital.
Yeah, so Sygnus Capital, yeah. So they do securities. They're a securities dealer. They're licensed. So they issue securities. They can structure securities for companies. They do that often. They have a pool of funds that they can draw upon because they manage our funds, which is the Sygnus credit investments. They draw upon that pool and invest into companies. And I think it's sensible for them to marry those two. We do a lot of deals. We see a lot of deals going in front of us. We make deals for people. So let me put Sygnus credit investments into that so the shareholders and us Sygnus Capital Management can benefit from the deals we do structure. So, makes sense?
Make a whole heap of sense, yes. And, I think it makes sense to me, but I think you might have lost people. It's a company that owns Sygnus. It's a company, it's one of the companies within the group.
One of the companies in the group, yeah.
Manages, one of the companies in the group. Yeah, so what I wanted to make clear to people is that it's not the SCI.
It's not SCI GMD. No, it's not one we own. Yeah. It's
on the JSE. It's not a listed company.
Yeah, it's not a listed company. You find that in the prospectus. You can find it there. So very often here, Sygnus Capital did a deal. It's not this SCI GMD. SCI GMD lends money. It doesn't structure deals. It doesn't go out and it doesn't really have like employees in that way where you see clients and they don't do anything there. It just invests in companies. So that's not SCI GMD that we own. But we do get benefits from the movement of Sygnus Sygnus Capital Management.
Boy, speculation. You want to go into speculation? I mean, we don't speculate.
I think
it's what we do anyway.
Yeah, I think it was on the line that I was trying to avoid. Oh, continue. Go.
Well, why? Is there a specific reason you want to?
I don't know. It's like
Because that's what we do.
I don't speculation, but it's I don't know. I think I was protecting maybe. Like they haven't said it outright that's what they do.
But they never do. If you wait for them to say it, it's already too late.
But you know.
Yeah. Show the people what we do. That's what we do. What's what we do.
So basically, say me and Randy. So we meet
Randy
and I. Sorry.
Thank you.
Randy and I heard it's not actually incorrect to say that, but let's go.
Oh well.
Depends on the context. I think I was incorrect.
Then I was going to look up the article, guys, and send it to me, and that will be in the show notes. That's very important.
I was incorrect just now, though. I think. But Randy and I, my
English teacher is so proud.
So we are so we are licensed securities dealers, right? And we structure deals. So a company comes to us and they want us to create a debt security for them. So they want to make a bond or a
security for them. They'll talk to the people and realistically. They
want
to borrow some money. Somebody come to you and they want to borrow some money, but they don't want. They either can't get it from the bank or they don't want the rates that the bank giving them. So the bank say, yo, we'll lend you at 16%. And you're like, yo, you 16%.
Aye, brother.
Exactly right. Now they're rough. Even your car loan now is like 8-9%. I saw Marcia Forbes asking that, and I pick up Marcia Forbes. But if the car loan is that cheap, a business needs the best rate it can get because interest is actual money lost to them, right? So I just want to explain what raising the bond does for people.
Exactly. So they link Dana and Randy, and Dana and Randy make the bond for them, so which is we
put together the money. We'll find the money.
We'll come say, all right, no, not even that. We just say, these are the terms under which money will be lent to you.
Yeah.
We're going to find the money.
Yeah.
Say Randy and Dana have a company with a bag of shareholders, and the shareholders put a lot of money to that company. And that company's purpose is to lend out funds. The best, Randy and Dana now the money personally, or we don't have enough money to fill every single bond that we do. But we have some shareholders that give us a company, whatever. There's a pool of funds still then. Then I just draw on that pool of funds whenever I do deals and fill the thing there. So fill the bond or whatever. So then all the money
so
that
actually
lend out.
The money,
So I lend the money from the pool of funds I have here, which is a company. I think that's what SCI, JMD, SCI, JMD, SCI and SCM.
Sygnus Credit.
So Sygnus Capital Management structures bonds and notes, and then Sygnus Credit Investments.
And I think they also manage SCI.
Oh no, they definitely manage.
So they also manage the listed companies. So I think so. What Dana is saying that SCI, the listed company, is just almost like the cash hoard.
Yeah. It
is the vehicle of saying, hey, we have great deals happening. Do you want to fund them? Give it to us. And this is how we'll fund, which is why they pay huge dividends, because they're designed to not keep too much money on hand.
Or cash come.
Yeah.
Either we'll go new deal or get some dividends.
Yeah. They use that term, they popularize that term, which of course the long-time experts know, the people heavy in the industry know, the dry powder.
Dry powder.
Yeah. So that's what they call their cash. So they don't leave too much dry powder. If they have a way for cash, they need it to do something. So that's why I put together, we're talking about speculation, kind of, to the people. So I put together the idea of Sygnus Capital taking a stake in a company in Aruba that is a chain that have a bunch of stores. A bunch of, what are they? What do they actually buy? A bar.
Yeah, they have, so it's something of that sort.
Yeah, Aruba Wine and Dine. That's what they took a stake
Wine and Dine,
in Curacao. And so they mentioned two Sygnus group companies. Sygnus Capital has entered into a strategic alliance with Aruba Wine and Dine. And that's a release from the Curacao Financial Group. Through its private equity fund, Sygnus Deneb Investments, the investment group acquired a significant shareholding interest in Aruba Wine and Dine. And it's part of Sygnus's effort to increase its portfolio in the Dutch Caribbean, blah, blah, blah. Okay, so they buy into the thing. The thing that they bought into is pretty good. I mean, the quote the director, Dr. Ike Johnson, and he, in essence, is they put together it and they have some experience here and them showing them experience. So in other words, they've shown that there's some impact in the market and it's coming through the form of other things. No, the point I made about speculation is me saying, if one part of my thing is taking a stake in this company, another part of my thing is funding it, and I'm funding them for them to take advantage of situation.
So I think they funded Deneb Investments in some way so they can take a stake in Sygnus, in Aruba when I die.
Through it. And that's in their group to Sygnus them. But I said that to say that I think it's natural to assume that it's very possible that they're going to list that company.
Go list that company, yeah.
List it in Jamaica, why not?
Yeah, I love that.
Yeah, list it in Jamaica, incorporate, put the assets in St. Lucia if you need to or whatever. Even keep it exactly where it is and just list in Jamaica. It gives those people an opportunity to cash in on the investment. It allows Sygnus a great state because they're in from early and they're also paying off the debt. So imagine if they raise the money through an IPO to pay off their very same debt to themselves at the agreed rate, pre-agreed rate, and then get back their money early, plus them own shares in it already. So then list those shares go up in value, plus them give themselves through SCI, preferential holdings.
Even give themselves, then give us.
Well, I don't know. I would only hope. I would hope. I would really hope.
If SCI gets something, then we get something.
We get. Yeah, well, at the end of the day, you're correct. Yeah. So any benefit SCI touches us greatly. Yeah. Big Sygnus. Rapidly one of the most interesting local companies in the local financial space. Anybody else? Anything else interesting happening? Financial space. Last time we spoke about Proven's launch of their.
The Sygnus article, they mentioned that they're looking at rights issue or APO as the means to raise.
Yeah, for the first time they mentioned an APO. You and I had a conversation about that. You want to make that one public?
Oh yeah, sure.
Yeah, about the APO. Why would they go? Why would they consider it? You know my thing already. You don't say it unless you mean to do it, right? Nowhere has APO been mentioned until now for the first time, and I'm sure these guys aren't light. They know what they're doing. So if they mention it, we can take that face value. It's being considered. So come down, rights issue versus APO. What do you think?
All right, so I think APO basically is, we know our shareholders want more than just our shareholders.
APO, well, tell people APO are. Yes.
APO, additional public offering. So I already raised some money on the market through an IPO. So I need to raise some more money, and I'm going to just ask for more money for the market. That's really
just going to issue more shares and
sell it.
Just make up more shares and just give you money for it. Yeah. Yeah, can they do that? Yes, they can. Yes, as long as the company laws allow them to, our shareholders agree on it.
Yeah.
And but if you think a little further, you might think, but wouldn't that dilute my holdings?
Not if you buy.
But if you don't, then it does.
If you buy, then again, if you APO is very likely to think there dilute, because
unless
it's public. So even if there's a share pool for regular shareholders, then if there's a pool where shareholders. If there's a pool for people outside of the shareholders of the company, then you get diluted the moment that person buys into that pool. So I own other company, right? And I issue some more shares. I issue twice as much shares. So one share, issue 2 shares, and say, Randy, you can buy. So I'm saying to you, I get watered down
immediately. Yeah, but that's if you're original owner of a certain percent. But like somebody with less than, at this point, nobody has 100%. So. I mean,
no, even then, think about it.
Oh yeah, yes. There must be some dilution. Once somebody new comes into the pool, there must be dilution.
Exactly.
There we go.
Yeah.
And of course, you are saying, so you are doing on the side of the APO. I'll do the rights issue then. I'd say our rights issue is pretty much same exact thing. Issue new shares.
And sell the shareholders.
But current shareholders have the right to get it. So that kind of forces the non-dilution. Because nobody new comes into the pool.
But that's why people usually do that.
Unless somebody refuses to take up their right.
refuses the right, or they can sell their right to somebody. Yeah.
And then it usually goes to other shareholders first, and then after that out.
Yeah, some rights you don't even touch public money at all. But some allow for, in the case where you don't buy.
Yeah.
Then the public can buy into it.
Yeah, there are a couple of examples of this. You guys can use a PJC search tool.
Yeah.
Why do you think they'll do an APO?
If they do, well, it's for KEY.ja net.
Which one do you think they'll do? You pick one, I'll do the other. That's right. So I thought you pick APO.
So I'll pick APO. So KEY.ja net. So I know there's a lot of money right there in the public space. My shareholders are X, but I want to raise quite a bit of money.
Yeah.
So
they tell us so much, 15 or 18 mil?
20 mil.
20 mil, but them have some already. Or it's 20
They want to raise 35, and they raised 15 already.
And so they want another 20. Yeah, for you guys want something to compare that to in your mind, they're trying to raise more money than First Rock.
True.
Yeah.
So then the thing there. So
First Rock is like 16, I think.
Yeah.
With the upsize.
So put money to the public, because I know that it's easier for my public to feel it than my shareholders.
Because there's more people in the public, which is the JMB, which is what JMB went with.
Yeah.
Because they had a huge thing to fill JMB.
Because my shareholders can still apply to the public.
Yeah.
I might even give my shareholders a pool.
Yeah. Okay. Now we're talking. Now we're cooking with
It makes sense.
All right. So you might give your shareholders a pool. So they still get diluted, but there's less of a crush. Because you know there's going to be a rush, right?
So they get preference on getting shares in the actual offering.
Yeah.
So, yeah.
Let's work with market psychology also. Simple as the market likes to be sometimes. The last time they heard APO, the first time any of us heard APO, I think maybe the first time I heard APO was JMB.
Yeah.
Successful. Today we're talking, it's like, I'm talking off the top of my head. You get me? You know how it go. People expect.
Oh, so APO was good one time, so it's good now.
Select M must act the same way because Select F did, Select F must act because Wigton did, even though those three companies are
quite different.
Well, two of them are quite different.
They're different. Those two of them are quite different.
Yeah, well, no, one is M and one tracks are different.
Right,
anyway, so the difference, the difference in what am I saying? Difference, but yeah, you said, let me get back on track. APO. And he says because it allows them to cast a wider net, so more people can come in, and you can have a reserve for shareholders. I say rights issue. So a rights issue is the same thing as I said, but you have the right to get it. Why do I think they do a rights issue? I mean, I don't really. They could a rights issue. It allows them to keep one. I think they have some amount of ownership of the shares that they do want to keep.
So it keeps.
Yeah, it keeps it at
their interest.
It keeps their interest easier. You can. But
I don't lose percentage of their profit at all.
Exactly.
When I do that.
Yeah, I'm just raising this money. But then it forces them to find that money, right?
Yeah.
Let's say that, I don't know if this is how it is, but let's say Sygnus Capital Management manages SCI, which is who we Jamaican shareholders own shares in on the JSE. And so SCI would buy into the rights issue. So let's say they own 25%, for example. SCM buys into SCI's rights issue to the tune of their current ownership in order to avoid being diluted.
Yeah.
It would mean that they would have to find the money, which would mean that, they have to find the money.
I have to pay over my pocket to fill this. And I know that
or get diluted.
Or get diluted. So
you think they might mind being diluted?
No, not really, but you're talking about APO.
Because they have the golden share, they don't care, they keep control no matter what.
And I don't think they took up much of the actual outstanding shares in the company at all during like SCM. I don't think they took a heavy position. Yeah,
that's why I don't think they have a big position either, because it really is the money.
I think
the money pool.
Who had a position in it were the shareholders, were the principals of SCM, but it wasn't like they took heavy position to, Yeah,
so, you mean in terms of company ownership? Because in terms of personal wealth.
Yes, I don't. Exactly. So I don't think they were so. So they're not really looking at the company ownership on a personal level, which is why the golden share is there. Yeah.
Yes. They just want to be able to hold control.
The golden shares of control. The actual shares they own is personal benefit. I believe my stock going to do well. I'll buy some.
Boom.
Yeah.
What are they? You remember what they're rewarded on? I don't remember.
They have a hurdle rate, and it's percentage return on the portfolio.
Percentage return on the portfolio.
And then, so they have a management fee for the assets, and then a percentage return on portfolio hurdle rate, performance fee.
They hold their own shares? They hold their own shares?
Who?
SCI.
What do you mean? No, I don't think so.
You don't think so? They hold anything that hold their own shares?
Yeah, I say that's the thing. They're private.
Yeah, but I'm thinking
it's not a private investment.
Yeah, but you get. So I'm thinking about their hurdle. You know how it go. If you can, you can benefit through a rights issue if you do it right, and then you can. Your share price movement could influence your gain.
They might just buy into their own thing there. Although,
so I'm asking just because that's it's an easy gain to make, and it's value. It's value. Well, and my it's a target of mine. Like it's good. I'm not going to take the road to help me with my.
But the thing is, the industry players don't read.
The Sygnus guys have proven that they do what nobody else is willing to, and they're benefiting from it.
Yeah, true. What they're doing right now is what people we complain about all the time. People not give money to SMEs. Hey, we have Sygnus. Well,
Sygnus found a way to
that
find, to work out something new.
So we have to see what them do.
The mezzanine. Well, you know why I was saying that, because at the end of the day, I was looking for the benefit of shareholders are here to make this money. So if I care when they want to make this money too, and I want them to make the money off the share price. Because, you know, in a rights issue, you usually get that chance to make some money because you get some shares that, let's say the shares are worth $100. You get some $100 shares at $50, you know? And then the day after the rights issue is done, those shares you bought for $50 are worth $100. And so that's a good percentage gain that you make on your money. And if they have to give themselves that benefit, then obviously we can just ride the coattails and get the same benefit twice too. Because they would
and when they do sell those $15 shares, they still actually get that money. So
and they actually get the cash for it. Yes. Yeah. So it's an actual asset.
And so I bought at 15.
Yeah.
So it's at 100. Then the money that SCI will be taking in will be 100 for each of those shares instead of 15 for each of those shares.
Whoa, I know you just lost a whole heap of people.
Cool. So buy some shares in the rights issue, right?
Yeah.
But it's SCI buying SCI shares in the rights issue.
Yeah. Assuming they're allowed. But yeah.
I think they're allowed to, but I don't think they're doing it. But cool.
I think when you own your own shares, there's a specific line that it goes to. There's a thing. I was doing some reading.
Oh, yeah.
But whatever. Yeah.
Share buyback and all those issues. You have to notify JSC prior
I think they gave themselves the right to that share buyback in their prospectus. Which prospectus is a nice document to go back every now and then. Yeah. I'm going to link that too.
I have to look at the clauses of the buyback because they had clauses on it.
Yeah.
But yeah, setting there. They bought the shares back. They bought the rights issue, and they bought shares in the rights issue for $15. If they didn't take it up, they'll be taking $15 for every share they sell, right? So they take up some of it. They take $15 for they spend $15 for all those shares instead of getting $15 for all those shares. But then they go on the market and sell all those shares for $100. The money that actually goes to the company will be the $100.
Yeah.
For each of those shares instead of the $15.
One better, them can't even spend the money on getting it. Them can issue the shares to themselves.
Yeah, and that depends on them do it.
No, and issue like a note for it. So it's like almost like a loan.
Oh, okay, I see what you mean.
Yeah.
So yeah,
I'm assuming. who knows?
I don't think that matters. I honestly don't.
It matters. I'm sure to the accountants. I'm sure there's one accountant there at PwC going no, or yes, or who told you? But you if it's allowed, then it's allowed. You can and the cost for it, if there's some cost to be structured, then the cost would be at $15. If we state that it's pari passu. Shout out. Which episode we mentioned pari passu? You remember?
One of them.
No, man. Remember, you need to know these things.
No, not really.
I want to say it's like episode 3. So somebody at us.
Somebody carry us.
Yeah. Somebody at us and tell us which episode we mentioned pari passu. But yeah, so that's an opportunity in terms of a rights issue. But it also means that they would be raising a first rock level of money, more than first rock level of money, from a limited pool of shareholders already.
Yeah.
Right? Somebody right now also mentioned it. Yo, I remember I saw Sygnus in first rock IPO prospectus. You know what?
That was capital management though.
Yeah, that's capital management. Those guys are so smart.
But you look at the thing there though. I call it again the way Sygnus is split too with the rights issue.
Assuming the rights issue.
SCI USD, SCI GMD.
Yeah.
The USD people aren't very active.
True.
So will they be so inclined to take up in the rights issue?
There are people, there's always people who's always going to buy the US version of a share. Even though
I expect that you do the same like you do the prospectus. The IPO.
One for one.
If you buy this, then guess what? Anything you buy, you choose what you want it to be. And
that's what you get.
That's what it's going to be.
Yeah. Damn.
But if it's a rights issue, then they will be issuing a certain amount based on the pool to every single shareholder.
Well, not necessarily.
They're not.
No, it's all of it is one set of shares.
Sygnus one set of shares, but guess what?
You can they just have it in GMD and in USD.
But the right of shares you are able to buy is based on it's based on your current holding.
Yeah, your current holding is a percentage of total.
And suppose I don't want to take up my current holding.
That's your problem. You did not use your right. It's like choosing not to vote.
But say a very small percent of the USD people take up the rights issue. And then the GMD people don't oversubscribe their shares enough to cover. Then they don't have raised less than the money they target.
Cover, what you mean?
So, rights issue. Generally, what happens is often.
No, man, I get what you. I don't think we need to explain it again because people are probably bored of the third explanation. I get it that you have to. You're separating the GMD and USD
based on your shareholders.
but you shouldn't, because the company has a total. You were the one who brought this point up. You're correct that Sygnus has one total shareholding, and that total shareholding can be expressed in Jamaican dollars or US dollars.
I agree.
So if we are giving out X amount of money, we're giving out X amount of shares as a rights issue. We're giving out X amount of shares as a rights issue. If you say if USD holders don't take it up, but Jamaican holders might just take it up.
Yeah.
And if there's more left over, you know how you go all the time. Then everybody else has the opportunity to take it up.
I think you understand me.
Okay.
Say, for every 100 shares, I can take up, every 100 shares I own, I can take up 10 shares.
Okay, cool.
So all the US people, not all of them take up their 10 shares.
I get you.
So there's a pool left over of shares to be allotted. And the JMD people, they never oversubscribe their shares, to spill over and collect all the USD shares that's left.
So then they would have failed that raising the amount that they
wanted. Yeah.
But then that would allow them to push it to the public usually. And they would say to the public under the terms
if
of
they
the
care
rights
to do
issue.
that. Yeah.
And I mean, they want to get dry powder, so they're going to do it.
It makes sense too.
But
which is why the APO does make sense. Like,
so APO over rights issue makes sense.
Not about us do it.
Yeah, because you don't have to worry about doing that. I can still reserve shares for everybody. You're going to get watered down, but at least you get a reserve.
Sure.
Yeah. Let's talk real things though. You want to get the share price to fly, then you put a reserve for shareholders as of, let's say you want the APO open March 1. You say anybody who owns Sygnus shares as of February 15th. Or date on record, 14th or 3rd, whatever that is. And February 14th, between now and February 14th, the Sygnus share price would fly because more people would go to own more because the more shares you own. Well, it depends on how they word it. It depends on how they word. It depends on how they. I think that's why I want to know if their hurdle rate is linked to their share price because
It's the performance of the portfolio, not the company, not the shares.
And the company doesn't own its own shares, and you think that outside of maybe personal interest and the fact that I believe that they're paid. Are they not paid? Are they not paid in US in shares?
No, they paid management fee money, not shares. Cash.
Sure.
Yeah, I haven't seen Sygnus' share capital increase.
I really, it's the lie I want to believe. I want them to care about the share price. Yeah.
They might, because sometimes companies care about the shareholders or caring about share price. Very often. But sometimes they really don't.
What are the top 10 owners? ATL Pension, JCSD Trustee, Sigma Optima, MF&G, hidden accounts, NIF, JMB Equity Fund, Heart Trust, Mandala Incorporated. Who that? Do they tell you Sygnus? Like what the board, the linked?
Yeah, they should. Holdings. But yeah. So I don't think they care about share price. Or if they don't, then there's no real incentive for that. But you know where you go. You want to give shareholders a benefit. So if that's the case, then it always only makes sense to at a certain date. Because you don't want to confusion. This guy sell him shares and then him say him they own whenever. You make a certain date where if you're on record at what date, then you get go into the reserve pool. It always makes sense to have that date there. So,
boy,
it will affect share price if that's the case. Because I don't think that they care about share price to do that for the sake of share price.
Unless they care just personally.
And I think them guys banking beyond them shares. So
yeah, I really want to believe this one though. And maybe they just want to increase shareholder value.
Definitely, yeah.
Yeah, I think that's a real thing.
The thing is, companies see that differently. You know that shareholder value is not necessarily what them thinking about share price. They're thinking about the company doing better. So no matter what the share price doing,
and for them,
the company doing better.
Yeah, and for them, because Sygnus represents something else than it would represent to you and me. Yeah, so then they would be more concerned with the long term. So they're okay with not.
So while I would hope, it goes sometime.
But on the flip side, APO or rights issues sound nicer when it's at a huge discount to the current share price.
Oh, definitely.
Yeah. So that is an incentive in the thing to just have it fly.
Not necessarily, because guess what? I see the current share price. Oh, well.
No, the APO you state the APO price from jump. So if let's say I say it's let's say Sygnus is $27 and I say I'm giving out 13 shares at $13.
Yes, I wouldn't buy. Yeah, and so as I was saying, if there's no Azat, there's no Azat clause.
But Azat is shareholders as at February 1. So you do that because at February 1, Sygnus share price is probably going to be like $45. And your rights issue or APO would still be at $13. And that looks like a great discount to market. And that's everybody wants that profit. Yeah.
I get what you're saying there. That makes sense.
Yeah, that would make sense. I'm really hoping that it might. It makes sense. Everybody eats.
Yeah.
Makes
sense.
What do you think about QWI?
QWI.
They've just dropped them NAV, you know. The NAV has been
126. So that's up on the. That's up, right?
What's up? QWI?
It's above.
Well, today is like the big day for QWI. Not only is it below $1, it ended the day at 80 something cents. Wow. How are you feeling?
Yeah, I'm fine over here, bro.
Well, on the 24th of January, its net asset value was
$1.27.
$1.26 on January 24th per share. And today we're recording this. Well, right now we're recording this. Well, people hearing this January 29th. Well, at the end of January 29th. So I'll say Tuesday, January 28th, QWI ended there at what? You know?
The last posted before that was January 17th at 125. So it's been around 125, 126. So the 126 jump is not really much of a jump. But it's a percentage jump on a lot of money. So it might just matter.
What do you mean? On a bigger pie, piece of the pie?
From 124 to 126 is a small percentage, right? But that small percentage on billions of dollars.
124 to 126.
Yeah, so 126 to 124. What that?
When you know the math, man?
That's too small a gap.
1.6%. That's like a fee.
Yeah.
Or 1.6%
on a couple $2 billion.
2-3 bill?
Yeah.
Yeah, that's nice. And they say that on 2 bill.
Yeah, so they made good money there.
32 mil. I could do well with that.
Well, yeah, it depends but I said people other people trying to so what I think is wrong. Other people try to guess what's in their portfolio based on what was at what they had at prospectus. So they say, "Oh, this thing fell and went up." I've seen a lot of people do it. I just ignored it. I stood back and watched it and made them do it. I maybe made a comment or two, but I never said anything outright where I think it's kind of not sensible to do it. They sit back. They say, "Oh, Sygnus probably still has a heavy holding."
Sygnus or QWI?
QWI probably still has a heavy holding in Carib Cement. And Carib Cement shares fall. So that's the reason why they now fall. And that is based on the Carib Cement holding from the last Carib Cement holding you see, right? When I'm saying, all right, cool. Sygnus is easier. So QWI is easier to track quarter to quarter.
Yes.
I remember we report on a daily. So when the quarter ends, you know the price, you know the NAV at the quarter end, and you will get the results 45 days after that. And on that day when the quarter ends, you can calculate how much money they made or lost on a portfolio based on the NAV movement. So to carry cement jumping up and down, every time you jump, you say, "Oh, we make some money." It drop, we make some money, and say jump today, and we never make some money. So you go guess what else in the portfolio to see, oh, this is why this fall. You counter the carry cement drop. I don't know if them actually still have carry cement. And you're doing this gymnastics wondering what they have. You fully don't know what them have and guessing into the air.
Okay.
I think it makes sense better just watch the NAV.
Yeah, because the NAV, no matter what they have, the NAV is the NAV. They can't lie about the NAV.
If you have 20 stocks and the NAV go up and the one stock you know about go down,
it don't make sense. I get you. Yeah, so you don't need to guess there. The NAV there makes perfect sense. And what I like is that they're the ones who put it out. Yeah, QWI. Well, the link is in the show notes. I think it's QWIinvestments.com/ whatever it's there. The link is there. You can check it out. But you can check that they put it up, I think, every Monday.
Yeah.
So every Monday they tell you what it was the Friday before. So the NAV is a NAV. So and for people, like a quick thing to know is that if it ends the quarter at a higher number than it closed, or vice versa, then that's good or bad. So if it ends higher than it opened,
then they make money.
And if they closed
lower than they open,
then they lost money.
Yeah,
but today, okay, so as of today, It closed at 91 cents.
So the discount continues.
That you can say that's a brave thing to say. There are people there who right now who don't know. I mean, QWI IPO at what, $1.30?
Oh, okay.
Yeah,
So
somebody's down
the discount I'm
42%.
speaking of,
My G, that is a big drop.
I think the NAV value on QWI, I think it's a good valuation on what to track the company. Say, what's a good price to buy the company at. Okay, you're buying a portfolio at whatever. As at a certain day. Cool? If you say then, today the price is lower than enough, then what I'm buying, the company I'm buying is, the assets of that company are worth more than the price I'm paying for it. So I'm better that discount.
Pretty much, straight
So
up.
me go to Randy, and Randy has a company that only holds NCB. NCB is $2.50. No, $250 per share. But Randy sells me at a value of $100 per share of NCB. He sells me the company. Then I just bought some NCB for $100 per share.
Boom.
And it's worth $250 per share. I also made some money. So that's how I see it.
Boy, that's one thing to say, but for somebody else, all I'm seeing is that them down 40%.
Down 40%.
Yeah, them down 42.9%. Yeah, that's rough. That's if you bought at $1.30.
Yeah, that's rough. So
Yeah,
what I said, I tell you what you now, look for that turnaround and look for. So I think the price will be. I don't think people watching the NAV too tough. I think they're watching.
I think it's damn about the NAV.
No, I think what they watched for the NAV was not fall.
Okay, I know that it's falling on.
So no, it was falling, and they started saying, "Boy, what I know about this company is just doing badly." So they started panic selling and then started pushing the price down. People exit for whatever reason, and the prices keep going down. So the good news of the NAV, if say the NAV starts going back up, I really wonder if they're going to wait until the results come up for them to tell them, or something went right. But
the results going to say that? Where's the next set of results?
No, I'm not talking about the results. So, not the next set of results. Any results that the NAV went up for whatever quarter, will they wait on that? Do they watch the NAV and say, or the NAV went up, so the company made money, or will they wait until the results are out to say the company made some money and buy it now?
So in other words, I'm waiting for the curve to reach. I'm waiting for to see the proof to jump in.
Yeah,
but the proof is there. The NAV is at $1.26.
Well, the quarter not done yet.
That's true.
Although, to be honest,
yes,
if you buy at $1.26 and you're buying at 98 cents,
91
cents, you're buying something for. If you could buy all the shares in QWI, you'd be purchasing a portfolio at $1.26 for 98 cents.
Yeah, that's a 38% discount.
Yeah, you'd be making 38% on billions of dollars if you could buy that outright.
Yeah. Or if you can just put your money in. You see, come back down to what people really want. Tell me.
This is me throwing shade at the Buffettologists.
Oh God. Let's hear this week's Buffetts.
If you could buy the company outright, then why? Then it makes sense. I'll then buy the company outright. You have to look at the value of the company and not the trading value, right? So why did I not buy QWI?
Yeah, don't count there. Don't count there.
That's funny, right?
But it's not funny to me. All I seen is a discount.
Yeah.
And you know what I feel even better?
But I don't feel like Buffettologists are saying that. It's a discount.
There's funny. I see funny things said. Well, as you know, you and I both have the same thought. Warren Buffett says a lot of things, and they are often misquoted, very often misappropriated, misused.
Because Warren Buffett can buy a company, all right.
Yes, he can. Yes, and he has.
Yeah, I know that $3 billion though. So.
Yeah. Or you can buy a company heavily. Yeah, market maker.
Yeah. So guess what? I know it don't make sense for me to worry about. It only makes sense for me to worry about buying the company outright if buying that one share can give me the same value. If I know that buying that one share I can go down despite what the company is doing, it don't make sense to buy the company. It don't make sense to buy that one share. Warren Buffett buy the whole company. He gets the actual assets of the company, the money in the company. Good.
Control the company, yeah.
Everything fine for him. Me know buy the one share and sit down and watch my one share go down and then say, well, the company is doing well. Nobody is caring. Let me keep watching it. Nah, bro.
Yeah. You can't. I say you can't do Warren Buffett moves and try Tanto tactics. Yeah, if you have Tanto money, big up Tanto Blacks, my artist. Yeah, people don't think when I say Tanta moves like this in Tanta, that's my artist. That doesn't mean that you have to act as where you are. When Tanta was by the train line, him act like he was by the train line. When the man there in the hotel, him say, excuse me, and go, excuse me, and go through, yeah, him say, when they're on the balcony, he's on the balcony. Him act wherever him is at the level that him at, right?
And look where he is now.
Look where he is now. Last time I saw a picture of him, he was in a vault with a bag of money around him.
To move from real rich to rich, him top to the real part.
Yeah.
Not real rich meant, yo, but not have money yet. But
yeah, but you have to say real. You don't say really real. Have to say it.
Say, yo, real rich, but there no, you're rich. So I don't hear him say the real again. Kind of thing rich.
Well, the artist money nice, you know. Same song you can see in 10 country and get it right.
That's why you call investing for dividends.
Straight. Big up dividends.
You buy it one time and
big up dividends. Dividend yield.
If you can buy a good dividend yield, then you're good. Put in
that
all
tidbit.
that.
I never want to drop these yet, but I'll drop one. What do you think the company that gave the most dividends in 2019 was? Guess.
Scotia.
That's a good guess. The company that gave the most dividends in 2019, and I measure dividend here by yield. So I measure dividend here by yield. So the company that gave the most, and by yield, what I did was I take I can't bother explaining. Get what they don't. The point is that's the most money you'd get from it, on average, anyway. Company by yield, this is me delaying, so I can bring it up because I have my phone and it's not coming up at all, boy. And I know I sent it to you and I don't remember where the hell it is.
Yeah, that's how I never about that.
Yeah. So the company with the highest dividend yield, 10 biggest dividend paying stocks in 2019 were, boom, you're right, Scotia, SGJ. Second biggest?
Carriers.
Of course, surprise. Scotia had a dividend yield of, they paid out $4.72 in dividends. Their yield was 8.72%. People, if I'm wrong, I'm sorry. I'm not though. You can at me on Twitter and ask me how I worked it out, or maybe I'll tell you.
Do that, please, because somebody get asked. Yeah. I know somebody get asked genuinely, and somebody go tell you.
Take it wrong. Well, let me tell the part of the piece. I'll just say it right now. So it's just the average price of Carreras every day that it traded, every trading day for 2019.
Yeah, so
and based on that average, I just took the total dividend yield.
As a percentage of
the total yield.
The total dividend paid as a percentage.
Exactly. Okay. So that gave us Scotia, Jamaica, with a dividend yield of 8.72. That means if you own it at least from the start of the year or whatever, if your average price for a Scotia share is below $54.15 and you held it from the start of the year, you got dividends of 8.72%. Means you put $1 million in there, you got back what? 87,200 and something minus the 15% tax. Second was Carreras. They paid a total dividend of 67 cents, which works out to a yield based on the same workout of 7.74%. And the third was 1834, believe it or not, back from the dead.
Yeah, I think that has to be I don't know. Bouncing around.
I don't know them do it, but them do it, boy. Yeah, they came back. Well, this might be because of the whole average pricing thing, yeah? Because they spent a long time of the year down the low.
Exactly what I said, that's a bounce around.
You got there are people. So my average price here for 1834 is $1.08, and the dividend is 8 cents. But I'm sure there's a time during the year where you could have bought 1834 for 80 something cents. Yeah, so somebody has lucked out because they would have made an even bigger yield, personal yield. But the yield on it at $1.08 is 7.39% for the year. Fourth was Dolphin Cove, $12.11 average price, 4.95% yield. And the fifth, Proven JA.
At 4.93.
4.93, $36 average price, $1.78. Such a funny thing. Proven JA's price was $36.
Look at it now.
2019, is it now 70 something?
Yeah,
it's close to 70 now.
It's heavy.
Nice. There are people who have been holding it for a long time.
I think after that is APO news.
You want to hear something?
And the JMB.
I think the PE is like, I want to say something like 14 or something like that.
Yeah, but you know where that come from.
You know where what?
That's how that come from.
In terms of the PE?
Yeah.
The sale of the access.
Sale of access.
All right.
Yeah.
And they still own piece. All right, they got that money. It was real money.
Thank you.
Yeah. They got that money.
So yeah, even though it's a one-off, guess what? They still made that money.
Yeah.
They put that money.
And what did they use?
That money could do something.
What they said they're doing with it.
How is it?
Boom, because we know they do.
Yeah, they finance. They going to look for new deals.
No, they never. Part of them used to hold on to their piece in JMB.
Yes. Oh, yeah. And I think, but there's still more money left from us, I think.
Yeah, well, them have things doing with their money. Proven one to watch for 2020. Definitely, this is something that I like. I think it's an easy look on. I think they have definitely the most room to grow, and I think they really come into their own now. Yeah, so that's a good thing for the dividend yield. A nice small gem. What else are we missing out? Well, what do we talk about? Well, the controversy. I touch a controversy for a little bit.
Well, is it really a controversy, or were you just saying something?
I'm saying something. I don't know how do I address this. I'll address it the only way I know how. Well, I'll give people context who don't know. Well, I'll link in the show notes, guys. If you don't know the show notes, check the show notes. I hope you listen on a podcast player. Hit the information section or whatever. Check your show notes. You see the link of it. I'll link it as Randy's truth tweet or something. You'll see it. It'll be a tweet from me. Anyways, a tweet I made, which, for context, I was watching the Masters. Yeah, I don't remember all the details of that show.
From Today's Money, they say they have a investment portfolio of $500,000.
General rules is that each of the competitors and it gets $500,000,
and they invest the money for a 1 year period. And at the end of the period, they will see who has the highest. It's 3 people from the finance space and 1 person who they call the novice. So the 3 people are the masters and 1 other person is the novice, who just a person who's not a professional in the investment space.
Yeah, he's a managing director, I believe, of Release. Yeah, he's a managing director. So he's somebody who understands business, and then there are 3 professionals from the investment space. And I'd never watched the show before. I had been sent, I had spoken about it the last year in 2019. I've been sent pictures of what the portfolio looked like. People asked me to comment on it, but I haven't had the time to watch it or whatever. But I like it run.
I think I've been saying throughout the period that I think it was been disappointing. Because at first, there was gain, but then I saw everybody was just below the $500,000, so they're all losing money. Yeah, and
it looked bad. So I finally saw an episode recently, the weekend, Sunday, Sunday, Monday late, and it was pretty late. I was watching it, and I wasn't even paying attention. It was just one of them videos on YouTube, and I heard what was said in the background, and so I made me perk up like it was some rubbish. I was like, what? Something that never makes sense. Something that if you know it don't make sense. And something around in Jamaica, I'm like, what? So I go back and I watched it, and I don't remember what it was. I don't know what quote, but this is one of those. If you watch the show, if you watch the show, anything about stocks, like some things that are said that make you wonder, like, these are like, anyway. So it was one of those things. Saw it and I was like, oh, this is iffy. No, funny thing, I like that show. Meaning the things I've looked on, the format, the idea, 4 competitors. 500,000.
I was calling
1 year.
When I first heard about it, I was calling. As called the number because
apply.
They gave a number to apply, and I called, but it just kept ringing.
3 separate people who don't know each other. 2 of them know each other, but they don't know. They said 2 of them, all 3 of them sent me. I think it's a picture. They were reading the newspaper and they saw a picture of the call to apply. I say, you should enter this,
I've been getting, somebody messaged me, why you and Randy not interested in things? They're interested in the Masters. I was like, what do you mean? Just to rewatch the show. I was like, no, man, what do you mean joining? I was like, I never really knew about it when it was about there.
Yeah, there was a cut-off time earlier in the year and whatever. We didn't know about it till before, and I like the show. It's a good idea. It's a great idea. Not only does it bring people into the market, or should bring people into the market, but it does that thing that we try to do on the show, which is we try to show people the thinking behind our picks and how we allocate things and how we use debt and the skills that we use in our day-to-day to make the portfolio, make the moves that we have. This is a way for us to explain it because nobody's really explaining it, right? My problem already with industry that I think they need more of that. They've been stepping up. Yeah,
the whole fact that this show is a thing.
Is exactly. There are people right now listening to this who work at a brokerage house. Yeah. So I like that. And there are people listening to this right now who just decide they're going to get serious about their money in 2020. And there are people listening to this who decide to get serious a couple of years. We have a nice mix and it's growing every day. I like that. Anyway, but I want people to get their thing. So the tweet, I said, I hope people are paying attention to how the professionals are managing money. and making picks, because that's what the show shows. It shows how they make the picks. And
Which is that's the whole point of bringing industry personnel and calling them the masters.
Exactly.
Yo, we are the guys who know this.
Yes, we are the masters. So it's a competition between the masters.
And which is why the stakes are so high for like a novice. I will go against if I'm the novice, I come out for wherever I come from. I come to this investing thing, and I know there are these guys. They're called the masters and they're better than everybody, or should be, or at some level they're better than the normal. I am the normal.
Yeah, you watch to see how the stars do it.
Money. Imagine I beat the masters.
Yeah, it's Champions League, my lord.
Yeah. So that's how it goes to me.
Yeah, it's like Bolt racing Usain, racing Casey's fiance.
When I first heard it, I was looking at it and saying, rooting fully for the novice. That's the only issue I would be feeling there. Say,
because I'm
not a professional money manager or anything like that. So.
Not an advisor, not a money manager, neither am I. And that's exactly the role I'd think of too.
So I was like, cool, I want a novice wins, because I know the novice can win in
reality. We know what's happening in the market.
Yeah, so I was rooting for the novice.
And the show in terms of its quality, high quality.
Oh yeah, well produced everything. And I like the panel sit down thing where you're cool. Sometimes so at the start you had everybody sitting together talking. And then intermittently you have they bring on one of the contestants and they speak with the presenter and they discuss the picks. They talk about what I'm going into next, what I've been in, why I'm in it, what are my thoughts about it. You know, just a run on the company.
Yeah, it allows people to see how money can be professionally managed, and the thought that goes into picks is a process that matters more than anything else. And so that's what the show is. They're doing it for 1 year. Each of them get 500,000. So 4 people, 500,000. One more restriction, which we found out about a little later on, was that they have I think 100,000.
So 20% of the portfolio must be invested in fixed income.
Yeah,
so that's like a bond or whatever.
I wondered if like maybe one of the JMMB papers could be near 7.5 or something.
I don't
think
because that's still considered equity.
Yeah, depending on how I get you, whatever.
You know, you go.
Yeah. The point is that there's 20% for a fixed position, and then the rest there's some rules. I remember I saw a tweet it, or somebody shared it with me, or shared a screenshot of a tweet. Point is, there's some rules around it. I'll go back to my tweet. So I said, I hope people are paying attention to how the professionals are managing money and making picks. If you need your money to grow aggressively in 1 year, they're showing you their level of competence at that. Well, ... They all started with 500K, and I have a shrug emoji. So for people who aren't seeing this, I mean, the link will be in there, but if people aren't seeing this, the picture I pulled, which is I pulled from their own Instagram, the show's Instagram account, showed all 4 competitors, and all of them were below, all of them were in a lost position, and this is about 6 or 7 months into the competition. Yeah,
that's all disappointed me for the whole. I kept asking how much, like every time.
Yeah,
I don't really follow it more than so. Like every now and then I see an episode and it comes up in my feed, or when somebody shares it in the Telegram group. So my thought was, I kept asking how much time left in the competition. At every step in the game when I saw where the losses were. Yeah. So
I remember we had a conversation about it when I want to say maybe month 3 or month 4. We're looking at it and we're like, yo, the portfolios. We're looking at it was a picture of the portfolios. We're like, why the hell would they set up portfolios like this if the goal is 1 year?
And that's that level of money.
Yeah. 500,000, that level of money.
Why are you spreading so thin?
Less than 500,000, 80% of 500,000.
Yeah. Why are you spreading
for 1 year? Why are you spreading it in why are you going in 4 or 5 companies if you're trying to get aggressive growth to win a competition against masters? Little did I know. Like, I mean, the person who's in the lead had 488,000.
But I think he has been a consistent winner, you know. So he's been at maybe better say, I haven't been watching really, but almost every time I saw it, he was leading. So
he's a strong professional.
He's doing something better. He's doing better than the rest of them.
Yeah. Well, I mean, so again, for context, so that was a tweet I put out. So it shows pretty much me saying that they're showing the level of competence, and the picture is showing that all 4 are in a lost position. The leader is at 488.7 thousand, and the person fourth is at 410.6 thousand. At 6 or 7 months in, and that what do I say to that? If these are the masters, what do I say to that? I can understand the amateur being down, you know. If amateur is amateur, that's cool, that's fine. And I've heard like some of the stuff he said, I know he's worked on, so you can hear the amateurism in there, right? So that's fine. The professionals, and I know this is not an easy thing, my lord, but I don't know if it's the competitiveness in me or the Jamaicanness in me or what, but if you're a master, right? No, this touches something that I don't usually talk about. I haven't spoken about in a long time, in years. So a lot of people new to this haven't actually heard me speak about this or read my tweet, and my tweets and my thirds, and this would be years ago. I haven't done those in a while. But I have had a long-term problem with the overall industry, and I think that many of the things within the industry needs to be fixed, and it's across the board, right? And you've heard me bawl about it from everything from how poor JSCs in their communication and the things that they should be doing and how well they should be doing it and how they should be communicating about doing it and their engagement, to if I think that maybe the industry needs to step its shoes up, step again, pull up them socks, you know. I was very plain in that I think that the base level expectation from a broker advisory company is that I should be able to walk in the door and tell you 1 year, give you some money and give you a goal, and you should be able to construct and in this case I'm going to come completely to equities. You should be able to construct an equity portfolio, a stock portfolio, a set of stocks for me to achieve that goal within the year, or tell me that my goal is unrealistic and show me why, right? No, between August 2019 and December 31st, 2019, I mean, I don't know if I didn't remember if the market was down for that last half of the year, but it exactly doesn't matter because stocks went up during that time.
They weren't invested, the money wasn't invested in the market. So to track that correlation, I think it's a poor correlation. But I think it's funny, that's a correlation that is always drawn used for. But the thing is, you measure against the market for, am I beating, is my portfolio or my picks, are they beating the market? That makes sense. But to say my singular stock or whatever, these 5 stocks I picked went badly in correlation to the market, or the market was going down, these 5 stocks I picked went down. That don't make sense because those 5 stocks over there, they went up. So the question you should now ask is, why did I pick these stocks that went down?
Yeah.
Why did they go down? Why wasn't I looking at those stocks that
there
went
we
up?
Go.
Why did they go up?
Exactly. It's all about the whys. Some have said again and again, it's all about the whys. No.
Professionally, the professional money manager or whatever, your job is to know the why.
All right, there we go now. So here's where we're cooking with gas. All right, now you're talking straight and you're saying it's a hard thing to do. It is not somebody can't, it's not lotto. You're not guessing.
It was exactly.
You have to, there's a process around it.
So if it's guessing, then we can talk about, there it is. So that's the funny thing.
We can say what the man play for guessing, but if we're talking...
I'm going to say the joke, guessing. So guessing, that's my, risk, don't I? Guessing is where you would start looking at a correlation to the total thing there, because guessing is when you pick a random sample of the market. Pick, choose, refuse, and generally random samples are looked at to track the overall basket. But you targeted whatever and you did badly on them.
You knew what the rules of the competition were coming into the competition. Yeah. It's just in the same way that I would expect that you would know what a client's needs are, because the client sits in front of you and tells you their needs. And
exactly. So you know the space you're working with. Exactly.
If you look at this as an attack, you set up your strategy to meet your objective, right? And then the tactics are how you're going to try and achieve that tactic, that strategy over whatever the set time is. In this case, it's a year. Tweets hurt some feelings, apparently. I will tell you, like I told the Bridget I was talking to, I said to him that about it after, because apparently people are very hurt that I said it and I'm insulting to the guys. But if you listen to the wording of my tweet, I'll come back to that. People are hurt by it and say I was giving them a hard time, I was giving the industry a hard time, you don't understand it, blah, blah, blah. You know, the usual stuff that people come with. I don't want that, but I want us to focus on what my point was, which is that this is a representative of professional management. And over 6 months, 5 to 6 months, everybody is below where they started. During a time where amateurs are making money on the market. I'm not telling people to go madly and fling themselves into any IPO or anything rare. But they've been just stable, strong companies on the market that have grown between August and now. Yeah, loads. Loads. And when I remember why I started watching the program, it wasn't even just the numbers that caught me, because I knew they had bad numbers from last year. It was the explanation I was hearing.
So all right, so
the explanation.
The times I've watched before, it wasn't like the numbers got to me, but then when you hear the explanations, they either I made a tweet about this. The explanations either miss the mark on we are investing for a year. So them start talking about they're talking as if the company is a long term, way beyond a year type of thing. But I'm like, all right, so it shouldn't be in this portfolio.
Exactly.
If you're waiting on gains for 5 years on the line, I'm not saying they said that, but that's the type of gist I got from them. Then why are you talking about this 1 year thing?
Yeah, I hear people talking about whether or not something is good for dividends. For 1 year, the best you can get is 4 dividends or one.
You said you talk about dividends you got.
Yeah,
so 8% was the best dividend.
Yes. So if you're investing for dividends, you're making 8%. But of course, they're investing for capital gains. Has to be capital gains. I realized, I think one of them realized later on in the series, like a couple weeks in, that, this thing is for a year. So he's reorganizing his portfolio with that in mind. My thing is,
that's from jump.
The jump, I expect you to be doing that. That is your job. You get me? And people say I'm being harsh, but I have to be harsh because most people don't understand the reality of this situation. I can't even apologize for it. So there's something that I want to start. I should make this very clear, because it didn't occur to me that the actual competitors' names, because their names are in the tweet and their names and their faces are in the tweet, that those guys might actually think, I'm coming down hard on them specifically. Funny enough, no, I've just been at this fight for so long that, in my opinion, you take any random 4 from the industry and throw in, and the results would probably have been the same. Nothing would have changed, in my opinion. So I never even thought about them. But I can understand how they could feel that way. And I don't want anybody to feel anything. I literally have nothing against any of them. I don't even know them personally. I met one of them once behind the scenes somewhere for a couple of minutes. Cool enough talking. See what they know. Cool enough interaction. But in terms of the work, in terms of the thing that I expect personally from professionals, where I can go to you and you can help me to get the X amount of growth, I think the results speak for themselves. And the reason why I started talking about, look at the wording of the tweet, is if these results were saying 1 million, 800,000, 700,000, even if they're all saying 515, 580, 570, whatever, even if they're just at that level of growth, this tweet would not have been an insult. This tweet is only an insult because of the performance of the portfolio, which is to show that I'm really literally not insulting, because I had no intent to insult them. I wanted people to know that, people, this is something that you need to be aware of. You need to press your people and find out whether them actually know what I'm talking about. Everybody can know what I'm talking about. Use your results that you care about. Yeah. And I got one of the early responses people saying is that, well, come on. A year, stocks are for the long term. A year isn't enough time to show somebody's competence.
Sorry. Full stop on that one. That sentence, stocks are for the long term.
Rubbish.
Top
level rubbish. Stocks are for every term.
Every term. Sorry. What? If you get it today, so stocks are for the long term. You want to say that, cool?
100%.
You hold a stock for 30 years, and the last year is the year the stock go up. So you buy it at 30, and year 29, it's at 20. Then in that 30th year,
it jumps to 200.
50, 200, sure.
Yeah.
Guess what? You should have bought it in year 29.
Here's the funny thing. The brother that buy it right before it fly up, is he a short-term trader? Is he a bad trader? Or is he a good trader?
He just sounds like, good trader. Like, this is the right time to buy this stock. Not those 29 years of losses. So guess what? There's always there's always a good point to get into a company. It's never stocks are for the long term. People make money on stocks across every single term. It's just, this company is going to do what in whatever period of time. Company looks strong, whatever. Buy that company at this period of time and get that rise.
At the end of the day, we invest in because we want our investments to grow in value. And the truth is, we want them to grow in value as quickly as we can.
Possible. Exactly.
Yeah. You think if you tell me, if I had the power to make NCB shares, which fell, by the way, to 180 something and 190 something, wow. I think that's in reaction to Trans Jamaica, you think? Or maybe bad results coming. But whatever it is, that's a nice good tidbit for you. But if I could turn the share price of NCB shares from 189 and 190 to 390 overnight by snapping my finger, sustain us every day, dog.
But everybody knows they'll do it.
So what I really care about is the value of my assets that I can exchange them for cash. That right?
You know what's funny and hypocritical?
What's that?
The celebration of gains.
Ah.
Because when you're losing for the 29 years, you're preaching, boy, stocks for the long term. But if it say out there for your long term, but the moment you make that short term gain, you're celebrating, boy, and it's a competence thing. Now you start talking about, look how well I did in this short term.
And I don't get it. So that's what you're taught, and that's a stable way. The most. If somebody knows absolutely nothing about numbers, and you can take them from knowing absolutely nothing. I hate to say it, I don't mean that bad way, but let's say that the densest person in the world, if you're going to teach them, the way that you're going to be able to teach them is long and slow, because it's a way that lends itself to being easily taught by our current teaching methods, right? But it's not the only way. The thing that I just want to get out, because I don't knock long term. Well, I don't even have to tell you that. You know that. Yeah, we invest for the long term. We think, how long are we talking about Sygnus?
Quite a while.
Yeah. But how long are we talking about? There are things that we're planning for that we know not coming for 2 or 3 years. I mean, people saw that list that IPO list that started in the group. That list started from 2017 or 20.
We just saw your bridging.
Big up Khalil.
Khalil mentioned that thing there. Your thoughts on Key.
Yes.
From before it listed.
Yeah, from before it IPO. From when we thought it was being listed. Yeah.
Your thoughts on it. And you've been watching it ever since. I know Randy, he keeps mentioning Key every now and then.
I think the original version of that list, that IPO list that we started with, had Key on it. Because from before Key even listed.
Before my time.
Yeah. I remember I said, Key's one of them companies that list. And we'll get to that, because Key's the next thing I want us to get to. We'll be talking for a while, guys. So I'm going to jump into that. I'm going to jump off this and we'll jump into that very quickly and then we'll wrap it, because we know you're listening for long. But I really want to end this point properly, because people need to get it. The thing that we need from the industry, I think I lost the plot a little earlier. Let me get straight into it. The thing that we need from the industry here across the board is a level of competence that we deserve, that our money deserves. All right. I know that industry knows this. I know the industry loves it, because whenever the industry makes money doing the things that they do, they broadcast it. Big up Barita. Barita had a wonderful year with their fund. Their fund had a wonderful set of returns this year, and they shouted that out. And I want them to shout that out. You know what I want them to do? 2020, beat it.
Yeah.
And shout out, say you beat it. And 2021, I want to beat it. I like that sort of thing. That's what I want to hear. You get me? And when you improve, you should love it. But if you have improved and you love it and you show things so that you've improved, and this isn't Barita specific here, guys. I'm talking across the industry. In general thing, if you've improved, human beings, we improve in something and we love it and we shout out the improvement. You then have to, loving the improvement is agreement, whether or not you want to say it out loud, is agreement that I have improved from somewhere. So I got better at something, which means things used to be worse. And if you're admitting that you've gotten better, you're admitting that things used to be worse. And if things used to be worse, we just have to admit that, I have a point. Right now I'm looking at things and saying, we deserve better. Right? Don't tell me say a year isn't enough time to test the investment method.
We knew going in that it's a year. We know people that have made money since. So let's not try. That's a goalpost walking away.
No, there are people who I grow in August. There are people from that grow that became millionaires over the last 6 months. I know of 2 specifically who were at my very first grow who are now millionaires, and they weren't millionaires when they weren't at 900,000 either. But even if they were, they would have made more money than all of the masters, and I find that to be embarrassing. I think that the thing when I'm talking to my friend, I talk to you off here, I tell you the reason why I feel this way. Straight up, me and them man are not supposed to be in the same level. I am an amateur. Yeah, there are lots of people who think, no, Randy, no way. The things you talk about, there's no blah, blah. I know how deep this pool goes. And I'm telling you that in this pool, the depth of this pool, of the skill level of this pool, I am an amateur. I think of myself in terms of what is capable. I think of myself as maybe being a 6 or a 7 out of 10.
In terms of?
Think of how far we could go if we had the money that we had. You have 100 million years to play with. What are the things you could do? The things you could extract from the market in terms of how you can do things. Somebody who's at the top. Think of Buffett, and Buffett, I'm talking not TV Buffett, but real Buffett. 2007 Buffett. Right? Buffett, who at his old age decided I'm going to go into Forex. That level of sharpness, continuous sharpness, if I call it a 9 or a 10, I have to say I'm a 6 or a 7, and maybe I'm pushing myself up.
Or is it might be access?
Yeah, no, of course, there's access. But sure, I'm not putting any excuses in my way. Get there and do it.
Yeah.
Right? The rules are the rules. It's harsh, but I have to live by them too.
Agreed.
My thing is, if I think of myself as 6 or a 7, why the hell is somebody who is a professional I can't say them on the same level as me? Let's be honest. In terms of the skill of picking a portfolio of local equities, and it is not something that is uber difficult. It is not that easy. It can feel that easy a lot of times. You know, I don't think it takes anything to QWI is 91 cents today. You think in 2022 it's going to be 91 cents or it's going to be over $1.91? If you're buying with a 2-year timeline, it don't take anything to know, say, yo, QWI is a good hold if you want to hold it for 2 years, right? That's just common sense in terms of how you think of things. And of course, you can carry it to your broker and you should ask your licensed broker. Now, if I'm sending people to go to a licensed financial advisor.
Yeah, I get scared of doing that, to be honest.
I am scared of doing it because who do I send people to? People DM me asking me.
And I want to big up Jermaine. He's just sending people to all the time because I know Jermaine has made a lot of money for his clients. When he was an advisor, he's no longer an advisor.
He's no longer an advisor. Boy, I feel people vexing. You need to give people an advisor. You know?
Yeah, as in, so if our competence for the market, Jermaine was there. Like me and him could have talked about stocks on a certain level.
Understood it.
Yeah. So
invest on his own.
Yeah, man, definitely.
Straight up. Ask your investment advisor how much stocks they've invested since start of the year and make them show you.
Oh yeah, man. So he's been investing from high school.
Straight up.
So yeah.
That mean him just start.
Quite a while. No, he's older than me. But yeah, not much older. But yeah, he's been in the market doing whatever, making money on the market, and the way he thinks
from
about
the hunger days.
Yeah, and me and him could have talked about things, and I would send him anybody come to me, advisor, send him to Jermaine, and I always got good feedback. Couple months in. Oh yeah, man! You tell me about this, and we make good money, and everything was fine. And he decided to not be an advisor anymore. He decided he wanted to do something else, move into a different area of the industry. But yeah, I think that's a loss.
Yeah,
but that's what me too. I don't feel fully comfortable, just recommending anybody because I know the level of competence
that is
I
required
want from people, and that he was.
Yeah. In conversations, I've felt the same way recently.
Yeah. I'm recommending on customer service.
Yeah. Can you imagine if I recommend somebody and that person is not good? Randy say.
Yeah.
Yeah. And it's me same on there trying the fire. I'm blazing it up because I think that we need it to be better. And it's not about the individuals. I literally am without any individuals. So I can apologize to them if they feel bad about it. I no ill will towards them. But as an industry point, I can't be honest if I say that I'm sorry about the point, because I'm not sorry about the point. The truth is the industry needs to be better.
Yeah,
and the industry is getting better. I like that. And them know it.
Oh, yeah,
they get sharp.
I see some industry people. Big up Kirk.
Who's Kirk?
Kramer Row on Twitter.
Kramer Row _
Yeah, man.
Yeah.
Kirk, he's on top of it. I hear him talk about the market, the things he looks at, whatever. He's on top of the market.
Yeah, I get it. Yeah.
He even helped start the 876 investment movement.
I rate those young youth. Yeah. I'm doing them thing. Big them up again. I don't want to dwell on this point too long, but my point is that, it really is. It's annoying. My thing is, guys, we deserve better for the money. We can do better. Let's all do better. All right?
Pay these people. So
they get paid to do it. You're goddamn right. They get paid to do it. So let's be better. All right. I don't want to keep people too long. So let's go into the real nice things.
Matter.
See the key there. Lock them up now.
Yeah.
You know that? Are
you old enough to know that? Beef.
Oh, God. You know that? Do you know Bogle? You old enough to know Bogle?
Randy, come on.
I'm just asking.
Do better.
You know Mr. Wacky?
Randy, do
You know Mr. Wacky? I know you don't know Mr. Wacky the way I know Mr. Wacky, because to me, Bogle was like, I know when Bogle became like an artist, like it's a big deal. You guys are used to ding dong. There was a dancer couldn't become an artist. No, I don't think you're old enough to know when Bogle was becoming Bogle, when Bogle was Bogle the dancer. Well, you can't be old enough to know when Bogle was a dancer. In the 90s?
In the 90s.
Black Roses? You can't know. You're being born.
I know. And again, it was even a thing for also when Bogle died.
Well, yeah, the thing is called crime.
No, you know what I mean.
Yeah, I mean, yeah, it was a big deal.
And the Bogle the dance, my aunties and whatever were doing at that time.
Yeah, aunties. You hearing people? That's all I want to say.
I'm calling Randy old.
Big up. Yeah, that's right. Big up your aunties. Yeah, well, that's enough of a tangent. Let's go straight into it. We're saying, so the big deal thing that we haven't mentioned yet is the Grace.
Yeah, the bully beef, key for the bully beef.
Yeah, so Grace put out an offer to buy, an acquisition offer for Key Insurance.
Yes, so the offer is, we put out an offer for 100% of the shareholdings, and they said they want to limit their shareholdings to at least 80%. Limit their shareholdings, so the most they would take up is 80% at the end of the day.
You downloaded the notice went up. When did it go up? Last week?
Sometime.
Wednesday, Thursday?
Yeah.
Notice went up. You downloaded the document?
Yeah.
Yeah.
Because that's no longer on the site. I can't see it anymore.
Yeah, I wonder why.
The link disappeared and I can't. So I can't.
A couple of people have it. I think it's out there public.
Yeah.
I've been scrutinizing it to see what exactly it says that would warrant it not being there. At some point, it'll have to come out. So just to catch people up to speed, Grace is trying to buy Key Insurance, which is a company on the junior market. Grace is Grace that you know, Grace that's responsible for the food, but Grace that really makes its money from
GK.ja Financial Group.
There we go. Which
is remittance, banking.
Yeah, but the money really comes from remittance, right?
Yeah.
Yeah, that's the heavy cash cow. Yeah, but that keeps it. But they have good things, and they've been reorganizing and being very open about the fact that they did that. Quick once over, then they really make the money from the food, they make the money from the money. And I think remittance, not just in Jamaica, because I believe they have the remittance license for the region, but I think remittance, to the region has actually been slowing down. Could be wrong, we can always check. And Grace is a company that thinks long term and is very professional and very, very, they're truly a corporation.
Yeah, definitely.
Yeah. So they're looking down the road and going, hey, this thing is slowing down. It's time for me to try and
diversify.
And change what it is, pivot with more energy into something that I know can give me what I need, right? No, I found it weird. How many insurance companies Grace own? Two? What the name?
GK.
General? GK.ja?
Yeah, GK.ja. Grace Kennedy General Insurance and Canopy.
Canopy. Then they own something else.
What?
I don't even remember. They own quite a few things in the insurance field. But I don't remember. I know they own 50% of Canopy, which is that new company which has all of their workers under it, and also the workers from the Musson Group. And if you think about the Muslim Group, I don't want to go too deep into it. I don't want to give people too long.
It's big people, separate and a lot more.
Separate and a whole heap. But it's separate officially in the Muslim Group? I don't know.
I would say I consider it.
I think separate is a separate, but they're definitely affiliated through ownership at least.
Yeah, sure, I say that.
Yeah. And so I think Canopy has a good future ahead of it. And they already have GK.ja and they have a couple of other things. But Key Insurance is an insurance company that one didn't have really strong numbers, so it's going through a rough time. And no, is at halfway through its tax break. So it has a 50% corporate tax break. And it's just about to be acquired by Grace, right? From the sisters who owned it and control it and are now selling their shareholding to Grace. Now, first tidbit people asking about, is Grace buying 100% or 80%?
They have to put out an offer for 100.
Because the law says that.
The law says that.
Yeah.
So it does make sense to do it in one go instead of buy it and then the law they say, put out an next offer. Just do it in one go and limit your take up. Yeah.
What that law says is that once you own more than 50% of a company, a listed company,
once you acquire more than 50%.
Yeah. You have to drop and takeover offer to every shareholder. Now the law doesn't tell you how much that offer has to be at. It doesn't tell you don't have to. If the company costs $50 per share, you can drop an offer of $1 per share that nobody will take up. But the law just says that you have to do it, right? And so they're at 15%, and they know they're going to buy an amount that would put them over the 50. So they just level a takeover offer one time to go for it, and they have a lockup agreement with the current owners to say that you will sell me your shares
on a pro rata basis. If the case, so the lockup agreement is if the case comes that I am taking up more than 80%, they will sell their shares on a pro rata basis to limit Grace's acquisition to the 80%. So they'll never have more than 80% of the company.
I understand. And they did that so that they can keep the 80%, which is the 80% requirement, shareholding requirement limit by under the junior stock exchange, which says to me that they are very interested in keeping that tax break.
Yeah.
Now, if I have two companies that do the same thing,
even if it's not tax break, you don't want to pay that money.
There is tax. There's money out of your pocket. Or they want to pay it. So I'm saying if you think from Grace, if you think in terms of a speculative way, if I have two companies that do the same thing, and one enjoys 50% no tax and the other one pays full tax, very quickly a lot of the business would start flowing to the other company because I don't want to have tax, or maybe I'd have this company buy something else or buy that in order to benefit from the tax break and push business through it, consolidate everything. I am very excited. Step 2 of it is what is important to me. So now we know that the offer is going there and they're offering to buy out the shares at 201. Current share price is $4 something. Yeah. So they're coming in at half of the price. So in other words, regular people probably aren't interested in buying into it. But if you're buying a heavy amount of shares, which is then buying 65%, they want to take up 65% of the company from the owners. And they said they're going to 80% if they can.
They did. I said that,
No, they did.
Where?
Maybe that's in the same document.
I have to read it again.
I will read it again.
I read from it.
If it's not there, then I will certainly edit this out. But if it is there, and I believe it is there, that it stated that they were looking for 80% of the company and they were maxing themselves to 80%. And they had an agreement which stated that the sisters who are selling have agreed that in order to protect the 80% shareholding and keep them on the right side of the law, meaning that the new owners, what will happen is that they will do a sort of, this is my words, a sort of balancing act where they will only sell the buying shareholders up to that 80%. Well, up to that, up to what it is. But if somebody else chooses for whatever reason to sell into Grace, and Grace gets more outside of that, then the sisters will keep those shares for themselves.
Instead of selling to Grace, they'll just
keep it for themselves
and just limit them to that 80%.
Yeah, that means that if anybody takes this offer, which is again at roughly half the price, the market price, then that would cause the sisters to have to keep those shares. But the reality is, I think nobody's going to take that, or maybe somebody will. You're noticing something earlier with the holdings.
No, the holdings are there. The holdings is that Grace has 15%, and the sisters now own 50%. So 65% as it was guaranteed for Grace. 65%
guarantee, 65% on top of the 15?
On top of 50 on top of the thing there. On top
65, but Grace said 80.
The 80, I think they said, was that they're limiting their take up to 80%.
Yeah, but you're only guaranteed to get 65.
Which, the limiting a take up is we won't go over 80.
True.
It's not that they won't buy it. It's not that they are buying 80.
I'm going to check right now. I'm not going to say too much because I don't want to screw with this, but I think it'll be very interesting. I'll check to see if none of this is edited. So people, if you are hearing this, then none of it needed to be edited, and it was in the document that was made public at the time. And I believe it said 80, which implies to me that there could be a further somebody else selling, maybe somebody major. If you look at the top 10 owners of that, there are a couple of interesting people in the top 10. Maybe somebody,
okay. Oh, definitely.
Yeah, maybe somebody chooses to sell theirs at 2 because they're in from early. Maybe somebody's in from 1 and them selling at 2.
Yes.
And maybe it's somebody who can own 2 things. Hi guys, this is Randy from the future. Me just jumping in for 1 second to say that I did what you just heard me promise to do, which is that I went back and checked the document and spoke to Danai, of course. And let's just say that the wording of it is very interesting. I think we're just going to, I've left this in just for posterity, and it would be hard to edit because I wanted to keep the flow of the conversation and have people understand it. But I will tell you to not take anything here as gospel. We're not licensed investment advisors, obviously, and also I think the wording itself, if you can see it, if you can find somebody who have it because the document was pulled, I think the wording around this is something that indicates why it may have been pulled off the JSE site after it was initially put up. So that 80%, 65%, 15% thing is very interesting. That's all I'll say. I'll leave it there. But just wanted to clarify, but I didn't want to ruin the episode. So here you go. And in case anybody's saying, oh, that's why the episode was late. I mean, kind of. We were pretty tired when we recorded, and it was recorded pretty late. But yeah, you can talk to me about that on Twitter. The point is, let me not go on for too long. The point is, listen to it, accept it as just one point that Randy and I said. But here, as you can see, Randy was saying one thing and Danai was saying another. If you have a friend who you can link who maybe downloaded the document when it came out before it was pulled off, you can look at it and see what we're talking about. Outside of that, just a little bit of patience because this will all come out pretty soon in terms of what happened or what will happen or what the intention is. We'll all see. But the gist is the same, right? They legally have to ask for 100% of the company, and that's what they have done. And I think they have made it clear that they have a lockup agreement with the previous owners, who you hear us refer to as the sisters. And that agreement has them acquiring their shares. That I think we all know is clear. And once they acquire even a part of those shares, and the sisters are legally required to do it because they have an agreement. But once they have those shares, it then allows them to control the company anyway. And I think they want control of the company, and they want to ensure that the company that they control still keeps its tax break. That was the main point. This is me talking too much, and I'm going to shut up now and let you go back to the episode. Hope you guys enjoy it.
Maybe.
You remember how it was said that NCB sold their JMB shares because JMB was going to get the commercial banking license, and so I think there's a limitation to one person being able to. There's a limitation around.
How much of JMB did NCB sell when that happened?
How
much did they own afterwards? None.
They sold everything to.
Yeah, sure.
They had them as an associate stake, and they sold out an associate stake.
When did JMB get the commercial banking license?
After.
Sure.
No, I'm not sure. I could be wrong. That's why I'm just asking you to. I'm asking if you remember. Then it's just occurred.
I think that's fairly recent. The selling of the thing that the JMB stake with selling to Proven and
getting it off the books.
Yeah, I think that was after JMB got this thing there.
I hope you're right. I leave this in. Well, I mean, I'm either right or I'm wrong. Check, yeah. We'll always check, but we won't get to edit this back. So, people, if you're hearing this and I'm wrong, I was wrong. Guess what? I tell you guys, I'm wrong all the time. One of us is wrong, one of us is right. We'll find out. I'll hopefully put the right thing in the show notes. But it just cast my mind back to that, because if there is a rule around one person being able to hold a controlling stake in two companies, and there could be a rule, there could be things like that. With regards to
start looking monopolistic if you start doing certain things.
Exactly. So I think there is that.
Fair trading commission style going.
I think there is that with commercial banks specifically, because that's a hard license to get in Jamaica.
I'll look at it.
And it's regulated. Yeah.
This is easy, verifiable.
Yeah.
So
we should be verifying it now, guys, but we're not doing it. So so you'll find out if we're right or wrong next episode. I hope you guys into that.
The suspense.
Yeah. So what the next thing to happen is in the process of the key buyout, or the key offer is the board of Key has to respond to Grace's offer.
Yeah. And
I tweeted it that I expect them to say no. I expect them to say, do not take this offer, because it's half of the market price. $4 something on the market right now, and they're offering $2 like a bit, and do not take it. And maybe you don't. If you choose to get out, if you have a big amount of shares on, you say, "Oh, not sticking around with this thing," then this might be an opportunity to just get it out anyway. Yeah, because and JMB would have to buy it because they leveled the offer. Yeah, so you probably have a chance to move.
GK?
Sorry, GK. Why did I mention JMB there?
Oh, we just mentioned them. Cool.
No, I think it's because I'm looking at the top 10.
Top 10, I know.
Yeah. So there is an opportunity there, I think, for somebody who might have a big volume. But again, you're taking half market value there, right? So what kind of value? What kind of cut is that?
Basically, there's a better price on the market.
Yeah.
That's saying I can sell for this, but I sell for less. Nah.
Yeah. What do you think Grace want to do with it?
The usual.
What's the usual?
There's no usual.
There's no usual for Grace.
So it's either thing there. Small push. No, so my least hope, it's a very big hope for me, is just use it to take up their shareholding in Canopy, but and then the reverse acquisition or something, reverse takeover or something of the sort.
Yeah.
And then
imagine Canopy going up against Sagicor with a half tax break. Worries.
Big hope, like imagine
if that's allowed.
Yeah.
If that's, maybe there's like a regulated industry restriction.
There's also the issue.
No, but Key was insurance.
Oh, by the way, I was informed that you cannot run health life insurance, and general insurance under the same company.
Oh, there's a restriction on that?
Yeah.
Health, life, and general can be in one place?
In one place.
Which is why we have general insurers separate from car also, because there's no Sagicor. Is there a Sagicor car insurance? You sure? Sagicor don't own any?
That I know. Yeah. They own one now, but look at the way they own it.
Who
it's
not
under one company. It's Advantage General.
Advantage, yes.
And they don't own it. It's at a group level holding, not Sagicor.
Jamaica.
Or not the insurance company in Sagicor. That
Sagicor Financial Group is who do it.
It's not a business line. It's two separate companies. It's owned by the same people.
It's not a business line.
So it's not like one company is doing both things.
Oh, it's just that they're share owners.
They're share owners.
So, I don't know if that's 100% accurate.
What's that?
There's nobody that has general and
tell me who.
When NCB bought Guardian, they sold Advantage.
And no,
And Advantage does...
no, I don't think that.
They sold it before, though. They did. That did happen.
But that wouldn't. But Sagicor bought it. So that.
No, who bought it? Sagicor. You just told me who bought it. Sagicor Financial Group. Financial Group is who bought it, or is it Sagicor Jamaica who bought it?
Sagicor Group Jamaica, I think.
You sure?
Actually, let me verify.
There you go. Because I'm thinking that I don't know about what you said about that rule. About
The rule
you can't.
is the rule I'm hearing is that it's you can't own them as in the same company. So it's not one company.
So one company can't offer,
and like can't offer the two of them.
Yeah. And Advantage was fully part of the NCB group. Mm-hmm. Yeah, they're fully under that umbrella.
What's the business line?
What do you mean was a
business
business
line?
line?
Separate company, completely.
It was, yeah, but they got rid of it when they bought Guardian.
But I'm not sure that that's the reason.
What do you mean? When they took over 62% of Guardian Group, that gave them controlling interest in Guardian Jamaica.
I know.
And so but it's following your rule. And a lot of people found that sale to be very sudden.
And Sagicor bought it. Sagicor that owns.
Which Sagicor bought it? Is it? That's the question.
Sagicor Group Jamaica.
Which website are you reading that on?
JSC.
Say it to me.
Sagicor Group Jamaica has filed a sale of shares in Advantage General by NCB Capital Markets to an unincorporated consortium led by Sagicor Investments Jamaica to its wholly owned subsidiary, Phoenix Equity Holdings.
Sagicor Investments is who is doing that through an unincorporated consortium led by Sagicor Investment Jamaica Limited, or you're not about Sagicor Life.
Well, may as well just say who's.
This is the Sagicor Group.
But Cap Markets held Advantage General. So it would be the same separation.
When you say
Cap Markets own Advantage General. So it wouldn't intermingle with Guardian, the same owners. So I don't think that's why they sold Guardian. I think that's why they sold HSE.
Hold on. No.
NCB Cap sold to Sagicor Investments.
No, they didn't. They sold it to another company
that is owned by Sagicor Investments.
That Sagicor Investments has a stake in. But do remember, say there's two other owners, including the MD. Or at least I think at the time he was the MD, the managing director. There's something there. There's something to that rule. Dig into it. I won't give the people too much. We'll call that one homework. But there's something there. I'm definitely going to look into it right now. But I think we've been going long enough. So you think that they're going to do something like that? I mean, I think it's the same thing.
Oh yeah, definitely.
I think there's no way you.
The best thing for me to do, that's what I can see, put Key's book over to GK General. So, and then Key.
GK General manages Key's
and then Key
book?
does give up his license, his insurance license, and then acquires GK.FG. That is a heavy wild play.
But no real risk, because the owner doesn't lose anything. Maybe a second license. You could sell that license to somebody. If it's allowed, I don't know.
I don't think you can do that. But
you might. Incorporate another company. Incorporate with somebody and then remove yourself.
Somebody could buy the already licensed company.
Yeah, like that asset.
Yeah.
The license is an asset, and if it can be transferred, we're doing a whole heap of speculation. But guys, it's always that.
What if GK? So basically, Sagicor, Key give up his insurance business to GK General. So GK General just holds that, and then Key gives up his license. So it's just on a holding company, and then it acquires GK.FG. And then GK.FG, that full group, pays half taxes. That would be a killer move.
Oh, I like that. Oh, that includes a bank. That includes so many things. I don't even know if that would be allowed.
Yeah, I really want.
I don't know if that would be allowed.
Yeah, because they're doing regulator approval. Because there's so much regulator approval across that.
Well,
FSC, BOJ.
That means a merchant bank. Maybe leave the merchant bank out.
FGB? Isn't FGB?
A commercial? I don't think it's a commercial bank. No, it's a merchant bank.
Oh.
Yeah.
That would still come under BOJ though.
Yeah, it does. But they have different rules.
Yeah.
Yeah, because you can own. That's why I said there was a point when JMB was a merchant bank, and when they got upgraded to get their commercial license, I believe some things changed, because I think there's a restriction on owning it. So we will check it. But you get the idea. I'm with you in that. I think they can't waste a tax break. You have to reverse buy something. You have something.
Yeah.
If you want a simple, maybe just buy your insurance company. We could be fine to buy Canopy alone,
Yeah.
Imagine a capitalized Key.
That's a good goal for me.
capitalize Key, bring Canopy in, and then do a rights issue. Capitalize Key by lending Canopy. Hear me out. Here's my dream. Have Canopy do a loan to Key.
And Key buys Canopy.
To like $1 billion or 2 billion, whatever, 10 billion. Well, 2.5. So this is the 10 million US. And then Key uses that money to buy Canopy. Now, this company owns the company who it owes its debt. You can't owe yourself. So it kind of, but maybe you can, because on the books it's two separate entities, and two separate entities, there's a debt there to be paid. And that money have to come from somewhere. Then you do a rights issue as Key, and the use of the rights issue is to pay off the debt used to buy, that I used to buy myself, essentially. You could choose to do that. Yeah. Or it could be fanciful. I mean, the experts, and again, I'm sure somebody shouting at the phone as to why it can't work.
There are many ways it can go around.
Yeah,
but yeah. In a day, reverse takeover. But
yeah,
my issue with reverse takeover is they would have to factor in Musson.
They would have to factor in Musson?
Yeah, because Musson's not going to lose 50% share.
Why would they lose? Why would you think that Musson will be in on this also?
No, definitely. As in, so GK does this thing.
No, it's not. It's Canopy lends Key the money to buy Canopy. So Key now owns Canopy and has that debt on its books.
How much of Canopy do they own?
They buy it outright.
So they buy it from Musson?
Yeah. And from Grace.
So Musson would have to get shares?
Musson would have to get paid.
I think it's a longer play for Musson than just...
Yeah, okay. But hold on, remember, see, you have the right issue afterwards, you know. Your reserve, and it's a heavy right issue.
If the moment they buy a Canopy, Musson don't own Canopy anymore.
That's cool.
And a reserve.
It don't matter.
It don't matter.
Because in the rights issue, you guaranteed me some future shares.
Or just give me some shares in Key to pay.
I pay via Key.
Pay me for pay me for Canopy via Key. Buy Key shares.
Yeah, but you can do a rights issue to cover the debt and get actual money from the public.
We're talking to ourselves. We're on a podcast.
That is true. Yeah, but no, it's true. Hey, well, that's how we think, guys.
I know, but alright, this guy going along. So.
Yeah, because we're touching the point. Yeah, wow, guys. Yeah, so if you heard that and so you say that we're wrong, well, welcome to our minds. We're wrong a lot of times. That's how we get right.
That's how we get right.
Yeah, excited. I'm kind of excited about it. It's most exciting. Yeah, I thought the most exciting thing this quarter would have been like the Sygnus and maybe Trans Jamaica. But no, out of the blue. And there's more coming. I'm at JC at the conference Saturday, and they had an announcement from JMB, new IPO.
Oh yes, Alliance.
The Alliance Group, another financial group coming, right? And I think AJA's coming. I think we have CM. I can't say CM. That's a dangerous set of letters these days. What is the C? What am I thinking of? It's that insurance broker. CAB cab. And I think there's a whole heap more in the off, and of course the Trans Jamaica, the giant that everybody is waiting on. Yes. Oh Lord, everybody's asking how you feel about it. Guys, the answer is the same every week. How you feel about it?
If it's not in the news, then my feelings won't extend beyond the news.
Yeah. Whatever it says in the news, the prospectus is still out there, like everybody else.
Yeah.
I think it'll be interesting. Guys, I hope you liked it. I hope it wasn't too boring for you. I hope it wasn't too long. I hope you enjoyed it. If not, give us the feedback at everymickle.com. I'm at RT Row.
And I'm at H.I.
And we are
earning season.
They're your posts combined. Thank you guys. Hope you enjoyed this one, and you'll hear from us next week. Give us a feedback, and I hope you enjoyed it. Bye-bye.
Guys. Pause combined.
Captain Gint.